Welcome back to the California Housing Collective. Redfin just posted their next data set, so we're going to take a look at the California housing market update through April 2026. As always, we take a look at a rolling 3-month period and compare values, inventory, and home sales year over year to take a seasonally adjusted, modified view of where things stand to show you county by county what's happening in the state of California. The county that is falling the 5th fastest so far in the state of California as of April is Mendocino County up here in the northwest of the state. Dropped 4.82% year over year. So the median prices dropped 549,000 down to 522,000. The amount of available homes has also dropped. So typically when you see inventory drop, you see prices rise, law of supply and demand. For Mendocino and most of the counties throughout the state, which we'll get to that at the end, you're seeing inventory drop. So the inventory has gone from 422 down to 386, and the amount of homes sold has dropped almost 12% from 45 down to 40. If you are a housing industry pro in Mendocino County, it's a tough market to be in. Prices are dropping, inventory is dropping, and activity is dropping. Watch out. Number 4, Butte. If you just head east into more like the north central part of the state, prices have dropped 4.93% year over year from 423 down to 402,000. Inventory has also dropped. This will be a trend that you'll see throughout this video. It's down 11.37% from 777 typical homes in a given month down to 688, while the homes sold has gone up 8.61% from 139 to 151. So typically when you see inventory dropping and you see activity going up, that means that the market has stated that we like these prices, we want to buy more of these homes. As supply goes down and demand goes up, typically prices start to rise. So I would expect to see Butte start to rise as well from the price perspective. Third, the county falling the 3rd fastest throughout the state of California is Alameda County. You will continue to see this trend where a lot of things are just in the red year over year. Median prices dropped 6.3% from 1.15 million to 1,078,000. Available homes, the inventory has dropped 8.2%, so 3,200 down to less than 3,000. And the home sold is down 3.57%. Ladies and gentlemen, demand is still low. Inventory is low and dropping further. Prices are dropping throughout the state as well. What inevitably has to happen is you have to hit a new equilibrium point where the market says enough is enough. We're willing to buy houses at this point, at which case you'd see the home sold start to increase, especially as the inventory starts to decrease, which both of those factors will push prices up. That has not yet happened in Alameda County. If you are a housing industry pro in this area, be patient. The bottom is yet to come. And once it does, things. This is to number 2. Also in the same general area, we have Napa County down 16% so far year over year for the median price. Went from $1 million even to 839,000 as the median price. That is a significant drop. The available homes is almost the exact same. It's only down 1% year over year, while the homes sold has gone up 12.62%. So what you're seeing as the price has dropped fairly precipitously, 16% over 1 year, people are saying, yes, give us these prices, give us these homes. We are more than willing to buy at that price and move it. So as the median price drops down, activity goes up. Again, if you're a housing industry pro, I think there's a natural fear of price drops or a market crash. But market crashes just help alleviate some of the pressure so that more buyers can enter the market. And for those of us who make more money as more transactions happen, if you're real estate, lending, or construction, this is a good thing. I want to see those prices come down a little bit so that activity comes up a little bit as well. Now for number 1, Mono County, bordering Nevada, an incredible 28% price drop year over year. So it went from 1.05 million down to 756,000. And again, this is a rolling 3-month period to help reduce some of the anomalies and some of the just the price variability. But that's an incredible 28% drop in 1 year. What you're looking at for available homes is down 16%, and the home sold is down 10.64%. If you are in this market working as a housing industry professional, I please reach out to us. This is a tough market to be in. If you're looking for pathways forward or how to survive the market as is, I have some suggestions. Mono County, and there is some opportunity here because prices are falling, inventory is falling, and activity is falling as well. It can be viewed as a bad thing, but there's some opportunity there nonetheless. Now, let's take a look at the top five where prices are still rising the fastest. Number five, we've got Kings County here, sort of south central California. It's up 3.91%. So that's a rise from 352,000 to 365,000 year over year. Inventory is starting to fall a little bit. So again, a common theme throughout the state of California. And typically when you see inventory going negative year over year, prices tend to rise. So you'll see that pretty commonly here as well. But the amount of homes sold is also moving up as well. Oftentimes what you'll see is as median price goes up, the amount of homes sold goes down. But no, you're seeing a pretty healthy market here in Kings County. Even though inventory is tight, prices are rising and activity is rising as well. Now let's go to the northernmost part of the state, Siskiyou, bordering Oregon. So prices up almost 5% year over year, so from 297,000 up to 311,000. Inventory is also up, so from 250 homes available in a given month to 264. And the amount of homes sold, it looks crazy where it's almost a 30% increase year over year in a given month. It's really like an additional 8 homes per month. Nonetheless, if you're in Siskiyou, this is a gold mine. This is an incredible opportunity to take advantage of as a housing industry pro. Or if you're working in one of these bordering counties, you might as well start putting out some feelers in Siskiyou. The market is hot. Inventory is up, prices are up, and activity is up. So there's something going on that's very positive in Siskiyou. For my friends out there in Northern California, take advantage. Let's go down to the central coast of California for number 3 on our list, which is San Benito. This is more of a mixed bag because we're seeing the median price has gone up about 5% year over year from 747 to 783,000, while inventory is down 11.1%. Homes sold, on the other hand, is up 7.76%, which sounds like a lot, but then if you actually look at the data set, it's an initial 3 homes being sold per month on average. This is more of a common data set where you have inventory go down, so naturally it'll push prices up as supply goes down. But what's a little bit different is that the activity is going up as well. So in San Benito, it looks like people are not overly price sensitive. They're seeing this price increase year over year, and they're saying, yes, we will still buy at that, possibly because there are fewer homes available, so we might as well take advantage of the ones that we see on the market that we like currently. Number 2, Sutter. If you're a housing industry professional and servicing this little area, this is a gold mine. Green across the board. It's a great thing to see. So prices are up 8.26% year over year. Available homes up almost 20%. And the amount of homes sold is up 14%. So Sutter is one of the hotter markets in California. If you look at this median price, it went up from 424,000 to 459,000. That is pennies compared to the number one market, which has been the number one market. We will continue to talk about it until it starts to slow down. So number 1 on the list is San Francisco. San Francisco is up 13.66%. But look at the numbers. It's gone from a median price of 1.42 million to 1.614. It's an incredibly hot market right now. I've done some other videos recently to try to add some context and explanation to why San Francisco is booming so much. Part of it is the lack of inventory. But again, that doesn't go far enough to explain why more homes are being sold. Typically, inventory goes down, median price goes up. That makes sense. But if median price has gone up 13% year over year, especially at these prices, why are more homes being sold? So there's some articles explaining the absolute boom in wealth that is being produced by AI and the tech sector may explain the majority of this growth. Not enough of an expert in that area to say that that is definitively correct. But if you are in San Francisco as a housing industry professional, pay attention, watch out, and really focus on the higher end of this market because it is going gangbusters. Now, let's take a look at the big five, what's happening in our biggest markets. Starting down here with Orange County, this is where I live. So Orange County year over year is up 2.92%. So from 1.2 million median price to 1.235. Available homes, this is big. So Orange County, most of the recent updates that we've done, it's small increases or decreases year over year, but the inventory is almost 1,000 fewer homes available month over month, which is an insane drop in available inventory. I cannot tell you why this is happening, but as long as the inventory continues to stay low, prices are just going to continue marching forward, going higher and higher. So San Bernardino is now the number 4 largest housing market in Southern California, or sorry, in the state of California. Median price down 1.24%. Look at this drop in available homes, 17% drop year over year. So in 2025, this 3-month period, there was an average of 8,247 homes. That has dropped to 6,800 homes. That's 1,400 homes fewer are available in a given month from last year to this year. It's an incredible drop. We have a lot of friends who work in the San Bernardino and Riverside area. So both of those markets tend to be worked together by a lot of real estate, lending, and construction professionals. And there's just not as much opportunity out there with inventory dropping quite a bit. Inventory going down, even though prices are going down, the amount of household has also dropped. So San Bernardino is a tough market to be in, sort of similar to San Diego, which is now number 3, the number 3 largest housing market in California. So prices have been holding steady for months over months. I think it's been almost 6 months since the last time it's been over a 1% difference in median sale price year over year. So San Diego, just slow and steady, a little bit of growth, a little bit of a decline, hasn't really mattered. So the median price is going from 912 to 915 this year. The available homes has dropped a little bit from 7,863 down to 7,431. But that drop of 5.49% is nowhere near as significant as what's happening in San Bernardino. And the amount of homes sold, this is still a pretty hot market with over 2,000 homes being sold each month. So San Diego, number 3 at the list, growing slowly. Number 2 on the list is Riverside. San Diego, as hot as it is not likely to catch Riverside anytime in the near future, and no market will catch the one on the west. Riverside is down 1.11% year over year. Continues its slow decline south. The inventory has also dropped pretty considerably, almost a 13% drop year over year, from 12,212 homes down to 10,631. But you're starting to see these lower prices attract more buyers, so a little bit more activity with homes sold in Riverside County. Then bringing us home, the county that drives the majority of California's housing market continues to be Los Angeles. Look at the available homes. It's down 7% year over year, but there's still over 20,000 homes on the market in a given month in Los Angeles County, which is insane. So median price down 0.28%. So that is largely holding steady even as inventory continues to fall. And naturally, what you're seeing is homes sold per month starting to fall as well. So it's 20% of the market is being sold. Okay. Few last things. We wanted to take a look at the overview of California as a whole. 58 counties throughout the state. Of those 58 counties for price, 34 are in decline year over year, while 24 increased. So you're seeing prices largely moving south, which we'll get to for the aggregate in the next slide. Inventory is the most unbalanced. So 44 of the 58 counties are in decline for inventory year over year, while only 14 counties increase their inventory year over year. So you are going to see this happening throughout the state, where more and more counties are experiencing a loss of inventory in 2026 compared to 2025. However, what's fascinating is that the sales, the actual activity, has picked up quite a bit. There are a lot of things that could potentially explain this. We'll get to that into another video that we're going to be talking about this upcoming week. But even though inventory is decreasing, the amount of activity is increasing year over year. Lastly, we're going to take a look at the actual data over the past 12 months. So, median price has largely stayed pretty consistent. We're getting rid of the year over year increases of 5 to 8%, which mostly happened back in early part of 2025. What you're seeing over the past year is maybe plus 1%, minus 1% over the past year. But what you are seeing for the past 3 months is steady decline median price throughout the state. And I don't think this is going to change. Now, remember, for a housing crash doesn't lose 30% overnight. It is typically a tiering where things start to like up some months, down some months, up some months, down some months before it inevitably starts moving south. I think that's where we are right now. You will not see a significant crash in any of the upcoming months, but I think you're going to see more data like this where the price starts to stabilize before eventually moving south. Part of the pushback on this is looking at the available homes. So the year over year growth in inventory used to be massive. So a year ago, you're looking at year over year growth of 31% in inventory, which is incredible. And that increased inventory helped slow the market down. But look at what has happened to this chart over the past year. From 31 to mid 20s to mid teens to under 10 to almost even. Now inventory has gone negative year over year. There are just not more homes being put on the market. The market cannot crash unless there is excess inventory. Unless supply really outpaces demand, the market cannot crash. And what we're seeing is supply start to really, truly tighten for the first time in almost 2 years. That's a big emerging story. Lastly, for the actual household, what we're looking at in terms of inventory, it was negative for the 4 months starting this period, and then a 4-month run of positive year-over-year growth. And now we're just trading back and forth with a little bit negative, a little bit positive, a little bit negative, possibly like fairly largely positive. If you are in the California housing market as a housing industry professional, you've probably seen slightly more activity starting to happen, even though there is less inventory out there, or possibly because there's less inventory out there. I will continue to report on this because we are a community of California housing industry professionals, and we are serving the California housing industry professionals that are a part of our community. If you have questions, if you have comments, if you'd like to push back, if you would like to add to the conversation, please do so. We are all ears. We want to respond to as many comments as possible. Again, I'm Nathan of the California Housing Collective. Thank you for watching, and we will see you in